Welcome to the Deep Dive. This is where we take a stack of dense sources, academic reports, and market analyst notes, and just cut right to the most vital knowledge you need.
And we are jumping right into it this week.
We have to. The market is absolutely roaring here in January 2026. And if you're watching the charts, one name is leading the charge with a speed and, frankly, a cost efficiency that makes its competitors look slow.
Solana. SOL.
Exactly. Solana.
That speed advantage is everything right now. Solana has positioned itself not just as a participant in this market rebound, but really as a critical piece of infrastructure.
So to get us grounded here, what are the numbers looking like today?
Okay, so SOL is currently trading at around $135 with a market cap hovering near $76 billion. But what's really remarkable here, what our sources show, is that this isn't just retail momentum.
Right.
We are seeing consistent institutional interest. These accumulation trends, they started building well before the new year, which suggests the big money is moving very deliberately.
So what does this all mean for you, the listener? Our mission for this deep dive is pretty straightforward. We want to demystify Solana's position here in Q1 2026.
Is this all hype, or is it fundamentally sound?
Exactly. Is it driven by real technological and financial leaps? We're using verified evidence, academic reports, analysts like Sentiment and CoinDesk, white papers to figure this out.
And you'll walk away from this understanding the precise levers driving this growth.
To do that, we have to start at the bottom, the foundation.
The engine upgrade that makes everything else possible.
Okay, let's unpack this with some real technical muscle. If there's one phrase that defines Solana's edge right now, it has to be fire dancer. This was the most significant technical advancement to roll out, and it just hit the mainnet this January. And for those who are unfamiliar, FireDancer is a high-performance validator client. It was developed by Jump Crypto.
And the deployment of FireDancer it's a truly monumental shift for the network, both for resilience and for performance.
Okay, so let's talk about that resilience piece, because historically, Solana faced what a lot of people called the beta dramas.
Right, the hiccups. Moments where the network would stall under an extreme load. FireDancer seems specifically designed to resolve those fundamental issues.
And what's the evidence for that?
Well, citing the evidence from the testnet tries, we can see the upgrade dramatically cuts the time it takes for a transaction to be officially settled.
Yeah.
What we call transaction finality.
How fast are we talking?
Oh, we're talking less than 150 milliseconds. So sub 150 milliseconds.
Sub 150 milliseconds. Let's just pause on that because that number is usually just jargon, but it has a real-world meaning.
It does.
To put that in perspective, sub 150 millers is literally faster than the human eye can perceive motion. So for a user, a transaction feels, well, it feels instant.
It's the holy grail. That's what high-speed blockchain tech has been chasing for years. And what's more, FireDancer, at least in theory, allows for processing over 1 million transactions per second.
1 million TPS.
Now, we should be clear, that is a theoretical ceiling. But it signifies a complete overhaul of capacity and durability that, it significantly raises the technical bar for the entire industry.
But hold on, we know scalability has caused headaches for Solana before. Is this genuinely resolving the old issues, or is FireDancer just moving the bottleneck somewhere else? Because, those massive TPS numbers sound aspirational.
That's a critical question, and it connects back to Solana's original design. This technical edge isn't just marketing, it's amplifying an advantage that was already there.
Okay.
We can connect this back to fundamental research. I'm talking about studies from institutions like Stanford University that specifically highlight how Solana's proof of history mechanism,
which is core to its architecture.
Core to its architecture, yes. It inherently reduces latencies when you compare it to competitors like Ethereum.
So if proof of history is the key to its speed, is it fair to think of it like a universal verifiable clock that everyone on the network just agrees on? So validators don't waste time checking each other's timestamps.
That's a perfect analogy. It provides cryptographic proof of time, pre-validating the order of events. So FireDancer is essentially this highly optimized new engine that runs on that pre-verified clock. It gives Solana a built-in advantage that is now being fully leveraged. It makes their performance metrics both verifiable and trustworthy.
And that technical strength, the speed and reliability, that translates directly into trust.
And trust is being mirrored by some very strong financial signals. If we pivot to institutional behavior, we see concrete evidence supporting this early 2026 strength.
What's the big signal?
Positive inflows into Solana ETFs for 6 consecutive weeks leading into Q1. This isn't just momentary excitement from a news story. This is sustained institutional commitment.
Right, they're seeking high-performance assets.
Yeah.
And those sustained ETF inflows, they're being combined with activity from large holders, right? We hear the term whale activity a lot.
Oh, dude.
But how does a firm like Sentiment verify this is smart money and not just a speculative burst, especially with all the noise in the market right now?
That's a great question. When analysts talk about whales, they aren't just looking at one massive transaction, they're looking for patterns.
Okay.
And analysts confirm that large investors have been consistently accumulating SOL. We're talking repeated purchases of, say, 10 or more SOL day after day.
So it's methodical.
It's very methodical. Sentiment highlighted this as a top New Year trend. It suggests deep-pocketed actors are positioning themselves. It's consistent buying pressure, not impulsive selling.
And the performance data from 2025, that really laid the groundwork for this Q1 momentum. We saw Solana process, 33 billion total transactions in 2025?
A staggering number, 33 billion. That volume is almost impossible to grasp.
It really is.
And it speaks directly to the network's adoption and its ability to scale without falling over. I mean, think about how many servers it would take the traditional banking system to handle that.
And what about the economic health, the apps built on the network?
Significant growth. App revenue rose 46% to reach $2.39 billion in 2025.
And here's where the competitive picture gets really sharp. We have to look at dominance. In December 2025, our sources show Solana captured $38 for every $100 generated across the entire tracked ecosystem's app revenue.
That $38 figure is so significant.
Why is that? What's the takeaway there?
Well, it shows that for every $3 spent on tracked applications across the whole ecosystem, one of those dollars is landing on Solana. It's not just a big number, it's confirmation of strong application health.
So the network isn't just fast and cheap, it's sticky.
It's sticky, exactly. Developers are building successful revenue-generating projects there, which in turn attracts more users, more liquidity. It's a key competitive advantage.
Okay, so moving from metrics to actual utility, the ecosystem is diversifying, it's moving beyond just DeFi.
And starting to capture serious enterprise utility. Our attention has to shift to real-world assets, RWAs. They've been a major Q1 focus. The total value of RWAs tokenized on Solana just reached $873 million this week.
And that RWA number is huge because tokenizing physical assets like real estate or carbon credits, that requires instant settlement and rock-bottom fees to even be viable.
Which is exactly what we just discussed with Firedancer.
Right. This is where Solana really demonstrates its enterprise readiness.
Absolutely. And we're seeing massive mainstream validation because of it. I mean, take the integration with Western Union.
The remittance giant.
Yes. They are utilizing Solana for global stablecoin transactions. That's not just a partnership. That's a major legacy financial player choosing this specific chain for cross-border settlement.
And then outside of finance, we're seeing infrastructure projects roll out. We have Dawn Internet launching new dashboards, the Black Box project in Q1.
Set to cover 5.9 million homes.
That kind of physical infrastructure being tied to the chain, that demonstrates a scalability that moves way beyond simple crypto trading. It's moving into the daily lives of consumers.
Exactly. The chain is literally being used to track and manage utility access and services. That is genuine, real-world utility. Now, we should quickly touch on some of the nuance in the ecosystem.
Specifically around privacy and liquidity.
Yes. Privacy stacks are increasingly important as institutions enter the space. And we're seeing those features come to the fore. Projects like RADR are offering full privacy stacks.
And this connects to trends we've seen in other privacy coins, like ZEC.
It does. It signals that Solana is aware it needs to offer optional anonymity for enterprise clients. And on top of that, we're anticipating major liquidity boosts from upcoming airdrops.
Okay.
Specifically, we're looking at JUP, BIRB, and SKR, which are being launched by Solana Seeker. These airdrops, they attract users and developers, and they ensure liquidity remains high.
But you can't talk about the Solana ecosystem without addressing the cultural momentum. And that means the meme season.
The resurgence of the meme season, yes.
The speed and the ultra-low fees just make it the perfect environment for that kind of rapid, high-volume retail activity. And the sources suggest it is firmly back.
It's true. Metrics like Pump.Fun hitting an all-time high with $2 billion in DebiX volume. That strongly suggests the speculative cultural energy is driving significant retail traffic.
That's a petri dish for it.
It is. The low cost means retail users can participate without transaction fees eating up their entire investment. It makes it fertile ground for that kind of experimentation.
And that is the fascinating dual story here, right? You've got this blend of serious institutional accumulation and enterprise adoption running right alongside high-volume, highly speculative retail engagement.
And the infrastructure is capable of handling both extremes at the same time.
So given all this momentum, where are the analysts setting their targets? We need some verified price goals for you to gauge the potential for this quarter.
Okay, based on the market analysis available, if Solana successfully breaks the critical resistance level at $150, a conservative target for the immediate future is somewhere between $160 and $180.
And that's based purely on technical analysis.
Purely technical analysis, chart action, and current momentum.
What about looking further out? What are the fundamental drivers for higher prices?
Well, year-end predictions from various fundamental analysts are hitting the $200 mark. That's driven by continued RWA growth and just ecosystem maturity. But the higher-end predictions, those are interesting because they rely on macro factors.
Still look about those ambitious goals.
Some analysts are suggesting the possibility for SOL to reach $300 in Q1.
Wow, 300.
But, and this is a big but, that goal is a macro play. It's highly contingent. It requires two major external factors to go right.
Which are?
First, that global interest rates continue lowering, which injects more liquidity into risk assets. And second, if the Clarity Act provides regulatory clarity in the U.S.
Okay, explain the Clarity Act quickly. Why is it so crucial for this?
Well, if that act passes, it would provide a clear legal and operational framework for crypto assets in the U.S. That regulatory certainty would unlock even greater institutional adoption than we're seeing now.
So more than the current ETF inflows.
Far more. It would allow major financial players to confidently allocate serious capital. The $300 target really requires that kind of significant, sustained market upswing.
That gives us a pretty wide, context-driven range of outcomes. But we absolutely must address the obstacles. It's not all sun and rainbows.
No, it's critical to address the speed bumps and the long-standing academic criticisms.
So what are the necessary challenges Solana has to navigate to stay on this path?
First, there's just the risk of persistent price volatility. Specifically, if the network loses the key price support level at $120, that could lead to stagnation. It could reverse some of these recent gains and, erode that institutional confidence we just talked about.
And the technological competition is just relentless.
It's intense and it's constant. Solana faces ongoing challenges from other high-speed chains like Sui and Sei, who are constantly iterating, constantly improving their own performance.
Right.
And on top of that, the entire crypto space is still dealing with pending regulatory actions globally that could impact market sentiment broadly, regardless of how healthy any individual network is.
And finally, there's that long-standing philosophical critique around decentralization, the idea that all this speed has to come at a cost.
Yes. Academic papers have consistently criticized the concentration of validators on the Solana network, and that does raise valid questions about true decentralization compared to chains like Ethereum.
But there is a counterargument there.
There is a vital counterbalance to acknowledge. This concern is somewhat offset by the fact that 67% of the total SOL supply is currently staked.
That's a huge number.
It is, and it demonstrates a strong majority commitment from the community to the network's security and its long-term future.
So, to summarize that, Solana has to keep prioritizing both privacy options and maximum scalability to maintain its lead and satisfy both these regulatory needs and academic concerns.
To synthesize what we've discussed today, Solana is exceptionally well-positioned for potential dominance in Q1 2026. This strength is driven by verified tech upgrades like FireDancer, which delivers that groundbreaking sub-150 meters finality.
And the strong engagement from both institutions and the ecosystem.
Exactly. Strong engagement across institutional investment and ecosystem growth, especially in that lucrative real-world assets space.
The network has real, verifiable utility. It's backed by academic evidence, like those Stanford studies that highlight its core latency advantage. But the final advice, based on all the data, remains crucial for you.
While the momentum is strong, diversification is still key.
The technical success is undeniable, but the market context is still volatile.
It's a fascinating time to watch this space evolve, where you see this technical capability meeting massive institutional demand head-on.
And here's a provocative closing thought for you to consider, building on that tension we just discussed. Given the academic criticism of validator concentration, that long-running decentralization debate, How will Solana balance the need for that ultra-fast, sub-150 meters finality with the long-term absolute imperative of increasing decentralization?
That's the real question.
That friction between speed and philosophical purity is what makes the future of on-chain finance so fascinating. We'll see you next time on The Deep Dive.